Corporate Finance OneNote Practice Problem. In this presentation, we're going to work a practice problem in OneNote where we will use ratios to create account balances. Once again, kind of reversing the order that you would typically think of, with the ratio analysis typically being from the financial statements to create the ratios for an analytical purposes, to using ratios to create or get to account balances. Very useful to deconstruct the ratios in this way to understand them better. Also useful for test question purposes, because many times test questions will be formatted in this way. Also useful for projections into the future. Get ready. It's time to take your chance with corporate finance. Here we are in OneNote. If you would like to follow along in OneNote, you're not required to do so, but if you have access to it and would like to, we are in the 344 Use Ratios to Create Account Balances tab under the Practice Problems section. Closing this back out, we're going to have our information up top. We're going to take a look at all the information first, then we'll go through pieces and components of that information as we need them to calculate the practice problem. So we have the sales given to us in our data, sales item, cash, inventory, we have the current liabilities provided, and then we have some ratios provided, including the asset turnover, current ratio, debt to asset ratio, the receivable turnover ratio. We know that the current assets consists of cash, marketable securities, accounts receivable, and inventory. So that's what's in those are the accounts that will be included in the current assets section of a balance sheet. So we want to look for these accounts. This is what we want to find. We have the answers over here, but this is the answers that we will get to as we go through this. We've got the accounts receivable, we've got the current assets, we got the marketable securities, the total assets, the fixed assets, and the total debt. So note that if you were to approach a practice problem like this, many people might go to this and they'd get to this last point and say, okay, this is what I need to do. This is what I need to find. I need to find accounts receivable. Let's just start with that one. Then go up to the data up top and start to figure out how I can figure accounts receivable. You can do that. However, that might not be the fastest way to approach this, given the fact that you're looking for multiple answers here. So you could think about how you would do that, and that's a useful skill to do. But you also might just want to think about, okay, I see this data here. Why don't I start to deconstruct what is given to me, especially these turnover ratios, because they're more likely to basically give us the result of something, an unknown, that hopefully will be used in a puzzle piece, used for us to help us to construct some of these unknown accounts down here. So instead of just basically picking one of these accounts and going to them one by one, accounts receivable, you could probably see that one, right? But it might not be so obvious if you got multiple different things you got to put together. So approach the puzzle by putting together the things that you know first would be the strategy here. So we're going to say, all right, here's going to be our information. It's broken down a little bit smaller so we can see it here. And we're going to say, all right, they gave us, if I look at this information, we have the account balances, great. And then the first ratio they gave us is the accounts receivable turnover. So why don't I just break that one down to its components the way I understand it, look for the unknown, then mark that unknown, and then find it using algebra. So I'm going to say, all right, we have the sales number. Sales number is going to be the income statement number. They gave us the sales. That's great. The other component, sales divided by accounts receivable. That would be the unknown. That's what we do not have. Note we have an income statement item and a balance sheet item, timing differences being different as we've seen in the past. Therefore, you might see this as sales or net sales divided by average accounts receivable. Just be aware of that as you work through problems. Depends on the context or what's being asked for the problem that you are working. So then that's going to give us the accounts receivable turnover, which is going to be the 1.8. So we knew the 1.8, the actual ratio, and we know the sales, so we can back into the accounts receivable, which I would then write down algebraically, which would be the 4,380,000 divided by X would equal the 8.5. Then we can solve for that and find the accounts receivable, which would be the 4360000 divided by the 8.5. That's going to give us the 512938. Notice I have a slightly different number here. Why? Because I worked this in Excel and we used GoalSeek in order to basically find this, which there's going to be rounding no matter what you do on these type of problems. I highly recommend going into Excel and working these in Excel. And you might even want to start your own Excel sheet and just use this data to work it from scratch. Or you could use the sheet that we gave so you can have a little bit of formatting for it and practice from there. Either way, you want to get used to how rounding is going to be affected. I would use this, just get used to what this tool can do, at least this goal seek tool, and so on. So we're gonna use this number here given to us. Notice that if I have the 4360000 divided by the 152938, we're gonna get the 8.5, but then it's rounded to like the 5th decimal here. That's because GoalSeek used an estimated trial and error tool in order to figure that. And that's going to be the rounding that's going to be involved. So hopefully that doesn't throw anyone off too badly. But note that rounding is going to be a factor no matter what. And I highly recommend, once again, practicing it in Excel. Okay, so then we're going to go to the current ratio. Current ratio is going to be because this is the next one they gave us. So they gave us the current ratio. So we don't know what the current assets are and the current liabilities. They actually gave us the current liabilities. And then they gave us the current ratio of the 2.75. Therefore, the unknown is going to be the current assets. So we're going to say, all right, I can back into that number then by taking X, writing it down algebraically now, divided by the 769,000 is going to equal the 2.75. Then we can solve for that algebraically, which would then be taking the 769,000 and multiplying times the 2.75, which would take us to the 2,114,750. If we were to double check that, then we could take that number and divide it by the 769, and that's going to give us our 2.75. So there we have that item. Now our next item is current assets, but before you get to the current assets, you might see that the next item we have is the debt to asset ratio. So you might go down to there. We just did the current ratio. So let's skip down to the debt to asset ratio, because that's probably the next one. If I was working this top to bottom and I was just deconstructing these, that I would look at. So I'm going to skip down here. I'm going to go, okay, there's the total assets. Let's see if we can go to the debt to asset ratio. So this might be the next one we would do in order. And we would say, okay, that's going to be, this is exactly how it looks, debt compared to total assets. So we would take the debt divided by the total assets. We don't know what the debt is, and we also don't know yet what the total assets are. So, but what we do know is that the debt to total assets is 0.45. So I would probably write this one down and say, okay, so I got this one. I have two unknowns. I can't do anything with it right now. So I'm going to leave the debt to total assets just where it stands at this point in time and just move on to the next one, hopefully finding that missing piece, either this item or this item, so then I can have one unknown and solve for it. The next one I would then go to is the receivables turnover. So if we go to the receivables turnover, that's going to be this item. And we say, okay, can we figure that one out? They gave us the bottom line number. Let's see what the calculation is. It's sales, top line sales, and that's going to be compared to the total assets, which happens to be what we need on the debt to total asset ratio, right? So we're going to say total assets, and then they're going to give us the total assets turnover, which was given at the 1.4. So the 1.4 was given. And notice again, this might have been the first one that I would have attempted if I just went from top to bottom, asset turnover on down to the bottom here. So, but in any case, we got the sales and we've got the total assets. Notice we have sales compared to total assets, and you might see that because we have an income statement account and a balance sheet account as sales or net sales divided by average total assets, depending on the context, given the fact that we have that timing difference between balance sheet and income statement. Then we can write it down algebraically. 4,360,000 divided by X, the unknown, equals 1.4. Then we can solve for this thing. We can say, all right, that means that we're going to have the 4360000 divided by 1.4, and that's going to give us our 311606. Now notice this one, it looks substantially different, and again, it's because of the rounding error, because we used GoalSeek to basically figure this one out, which rounds it to like the 5th decimal out. So in other words, if you took this number, if we took the 4360000 divided by the 3113,606, you're going to get the 1.4 rounded out to like the 5th or 4th decimal point out 3. It comes to somewhat of a substantial difference, given, well, substantial in relation, but maybe not relation to the amount of the number, just because of the size of the number. So just note that that's going to be a case that's going to be, you're going to have to deal with the rounding issues. It's going to be rounding somewhere. You're going to have to cut off the rounding if you're doing it in a practice problem format and writing it down by hand. which means you're going to have a bunch of rounding kind of differences because you're going to be rounding everything to some decimal place. If you're using Excel, then you might be using the actual, Excel will use the actual number, and then when you calculate it by hand, because you can't see the entire number, it'll be a little bit different. And then if you use something like GoalSeek and hard code something, you want to practice those types of things. So again, note that this number looks substantially different if I was to do the algebra 4360000, and then I'm going to divide by the 1.4. That's going to give us the 3114285, which looks substantially different because of the size of the number, but is actually just a rounding difference. Because again, if we take the number that we have here, then we're going to say the 4360000 divided by the 3113606 is going to give us about 1.4. So just be aware of that. Check it out in Excel. So then we're going to go down. So now we've got the total asset turnover. So now we have the total assets, which is the unknown that we needed down here for the debt to asset ratio. So the total assets now being that 3113606. So now we just don't know the debt for this item. So I can say, okay, so now we're gonna figure that out. That means we're gonna say X is the unknown divided by the 3,113,606 is gonna equal. I'm gonna move the decimal 2 places over, making this a %.45, and then we can do the algebra here. We're gonna say once again we have the 3,113,606, and we're gonna multiply that times 0.45, and that's gonna give us the 1401123 about. And then we're going to take, if we want to double check that number, we can say 1401123, and then divided by the 3,113,606, moving the decimal 2 places over, about 0.45. So we got about 0.45. So then now we've used all of our ratios that have been given here, and we could say, then we'd go back in and say, well, what else did they ask for, and see if we can back into it. We could take a look at the current assets. They wanted to figure out what the current the current assets, and then they wanted to figure out this marketable securities here. So marketable securities is something that we don't have a ratio for, but we know that all of these items are in the current assets. So I can then calculate the current assets and kind of back into this. So I would once again look at the formula to calculate current assets, which would be cash is what we figured. We figured cash, or they gave us cash. Marketable securities we do not know. Accounts receivable, we figured out at 512,938, and then the inventory we had figured out at the 870, and we know that the total current assets is the 2,114,750. So we figured out everything with regards to the current assets section, except for marketable securities. Therefore, we have one unknown. These sum up to the total. So we can write this down as an equation, which would be the 232,000 plus X, the unknown, the yellow number, plus the 512,938 plus the 870,000 equals the 2,114,750. Solving then for X, which of course would look something like this. We'll pull up the trusty calculator, and I'm going to say it's going to be like the 2,114,750 minus the 232,000 minus the 512,938 minus the 870,000, and that would give us then the 499,12. So there is that item. The next item that the last piece that we would need, we have the total asset calculation, meaning we're going to back into basically the fixed assets because they asked for fixed assets. So we can back into that by doing the total asset calculation, which would typically be, if you think about the balance sheet, current assets plus the fixed assets would give us then the total assets. So we now know the current assets and we know the total assets. We don't know the fixed assets. We can back into that number now. We could do so writing this down algebraically. 2,114,750 plus X, the unknown yellow item, equals the 3,113,606. Then we can pull out the trusty calculator, do the algebra, which would be the 2,114,750, and then we're going to divide or minus the 3,113,606, and that's going to give us the 998,856. If we double check that, then of course we could take the 2,114,750 minus the 998856, which is going to equal, or let's do that one more time. We should be adding these, the 2114750 plus 998856. And that's going to give us the 3113606. So that is it. That should give us everything we need to populate. I'm going to go back up top to populate these items. Here's the answer key, accounts receivable, current assets, marketable securities, total assets, fixed assets, and the total debt. So I highly recommend doing this in Excel, either with a worksheet that we provide, or even just take this and format your own worksheet, because that'll give you a little bit more formatting. The one we provide will give some formatting that'll look somewhat similar, but if you just do the thing from scratch, that would be even better.